Hi, everyone. This is F.A.C.E. Hi, Patrick, Mike, Mary, Bran. How you guys doing?
Good morning, Dale.
Team, how are you, KMan? And Ryan saying that there's, nothing to do in the markets right here. I heard that, right. I saw it. So, dollar weakness. What are you doing with your US dollar yen, KMan?
Oh, I've let mine go yesterday. I had a little try to see if it broke 142, didn't work. So
Yeah.
I've let mine go.
Yeah.
As I said, I mean, to me, it's more about a ping pong game now, in between ranges, in between the goalposts, and whatever you get is good to take, and then we wait for perhaps tomorrow the Fed minutes, or next week Powell or the PMIs, and then we'll take how things go. If you look at the yields, they are pretty stable.
Yeah.
Why would the rest, besides some flow and some tech plays, really move too much? I don't see too much of a reason for big swings right here and now. There's not much change in the global picture. So
that was not a planned event for Paul. It's almost like he requested it.
well,
Probably
it's Brookings, right? So I don't know whether he requested it or not. Still a week away. If he would have really had some urgent message to pass through, would he not have spoken earlier? So I don't know. In the meantime, all the other Fed members are pretty much on the same line. 75 not a given, 50 should be, and then we'll see what happens later. And we get the same from other central banks, ECB as well. The most hawkish are still pushing for 75, but then ECB Nagel, the German guy, said that perhaps 50 would be more appropriate. So everybody is in about the same boat. So that makes me think that we may continue to trade ranges for a while.
okay. All right. Blake made a nice little call yesterday off support and cable. Nice trade, boss.
Nice triangle.
Yeah. And Canada definitely respected the breakdown. Look at that.
Yep.
Yeah, that's a big one.
Yeah.
That was a big one.
Hello, everyone.
That was pretty textbook, and the wizard is here on top of it. So,
Yeah.
what you want to, Grega? You want to take the screen?
Wait! Before we hand it to Grega, since there isn't a whole lot to talk about today, so
Okay.
Just kidding. There are things to talk about today. Hey, I want to ask really quick, KMan. These comments that came out from China, how are you interpreting them about their COVID policy? I mean, it seems like they're tightening up a little bit, but does the market care?
No, the thing is right now, well, the market will care if it drags on. You can't.
Here's the market. That copper chart is the market caring.
Yeah, I'll pull it up right now. I mean,
anyway,
but go ahead. Go ahead. I'm going to pull it up right now.
So I think it just keeps a bit under dollar China dips, but it's more like a Chinese thing really right now. I'm not sure I want to trade a lot of other stuff around it, but those new rules, they're a bit
convoluted.
Give and take. But then just half an hour or so ago, Shanghai said that they were going to tighten their rules again. So that's not a very good news for them.
Yeah, I've got that, and then I'll shut up. China, Shanghai. People who have stayed in Shanghai for less than 5 days are not allowed to enter public places.
Yeah, that is one. And then so that's
for how long?
That's a clear. Well, for how long? That it doesn't matter. It's really the fact that they are tightening again, right?
Yeah, until they probably get clear on the COVID test.
Yeah, we've seen. I've seen some images this morning.
People lining up for 10 miles.
Those COVID tests. It's a bit of a pantomime, really. I'm not even sure if we see everything. But anyway, I mean, it might keep the commodities and stuff like Aussie a bit on its toes, but the market is not really reacting too much to it right
Not
now.
at all.
The underlying trend is that they will probably try to reopen in phases, but we need to monitor that as time goes on.
Yeah. Mike is in the comments talking about, shorting the Aussie. I think you just got to be careful with it while it's above the 618 retracement and this breakout point. I mean, while you're above 65.40, you just got to be careful, because I wouldn't want to short ahead of a 618 retracement, a breakout point, and you got futures rallying at highs right now. By the way, if you haven't seen the S&P, the S&P is actually at the highs of the session. And one thing about the S&P is we're holding 3,900. And if you guys are in the ForexAnalytix community, you guys know, as long as we're above 3,900, there's no way I'm shorting risk. So that's just that's where I'm. And on top of that, you guys see that reversal in crude yesterday? What a big reversal. I mean, that was gnarly. I mean, we were breaking support, and all of a sudden those headlines came out and reversed us. PM in our chat room.
Right?
What's that?
It was a rollover to new contracts.
And there was some headlines out of OPEC
Saudi
yesterday.
Yeah, Saudi said they weren't going to raise output.
Exactly. And so that created a massive reversal, and I think it caught the market off guard. And PM in our chat room asked, like, hey, what do we do with the S&P at the end of the day? And even though the S&P ended up not moving a whole lot, I'm like, man, I would not be shorting risk. I would not be short the stock market right now with that reversal in crude. And it's building. And look, if you start getting back above like $83 a barrel, somewhere around that neighborhood, these levels, you start getting above there, you're going to squeeze the hell out of crude. And I think crude is a decent risk barometer right now. There's a lot of times where crude will move up and the stock market doesn't like it, or if it breaks down and the market actually cheers the fact that it's breaking down. But in this case, I think it is moving more tandem with risk at this time. A couple other things, and I do want to turn it over to Grega, because we have the benefit of having Grega here, who's our in-house Elliott Wave analyst who updates all of these charts, which I shouldn't give away the euro right now. So you guys are going to get a good view of what Grega has to say. But I just wanted to cover just a couple more things. We have Canadian retail sales coming out. And Dale, you pointed out the 135 rejection, big rejection yesterday. This is another thing that also it's textbook. That's a head and shoulder. That's a neckline. That's a rejection. It held. And, I have a little ascending wedge that's trying to break down. As long as you stay below 135, we should still target 130. I mean, that's it, right? I mean, that's all it is. Now, obviously, Canadian retail sales today could move the market. I mean, KMan, do you have any expectations about Canada here?
Yeah, first of all, they're always 1 month delayed, right? So there's September data, but yeah, they're expecting a little bit weaker than the month before. I don't have much expectations, but I'm quite interested in Euro Canada for as long as we hold below 138.25, somewhere there. The dollar Canada rejected really, really well. For those who want to play dollar shorts, perhaps it's a good thing to watch. The 134, what is it? 135 is the big level, but there's already something in the 134s, right?
I mean, 134, you can see this little pivot right through here that we're basically on. I mean, you can see how it's been a nice like area for the market for the most part.
What's your green line?
The one down here is 132.
No, just above.
The moving average.
Oh, this is the previous channel.
Okay.
So you can see like the long-term previous channel. This is like the underside of that that channel already. But you know, I'm more concerned on dips down to 132. That's the 618 retracement. It's a breakout point. That's where we ended up holding. I was very skeptical being on the short side down here because of those things. And you know, I've been selling rallies now you know, here, but I was not selling them down here because of that, of those levels. So that's, I think this is a big, oops, here, let's go like this. This is really kind of the big range that we're in right now. But anyway,
keep
go
an eye
ahead.
on cable, because we are testing the top side of the triangle right now, the short term.
Yes, I did play the cable long yesterday, right here on the on F.A.C.E yesterday, and yeah, we're right up at triangle resistance. And I even tweeted it out yesterday afternoon. I'm like, while we're above this, you know, while we're above this 117 level, there's no need to be on the short side. Hell, if you've been shorting the cable, you're probably pretty nervous at this point. Wouldn't you think? I mean, I know I'm not. I'm just saying.
It depends where you're short from, but I've said over the flow show, I find the sterling traders, and let's go perhaps the bigger money managers, they are quite positive towards sterling. I find sterling holding very well. We had this big breakdown on the least trust and Quarteng stupidities. Then we had the correction all the way back up on Hunt Sunak duet for their budget. And now that we are kind of digesting it, I find sterling holding as a currency, sterling holding pretty well, I must say.
Yeah, and that's why I said, you know, if you're short, and your comment was, KMan, depends where you're short from. Even if I was short from 120, I'd be nervous right now.
Yeah, that's true. I mean,
you know,
it's holding relatively well, because
it is.
You had, and we're about give and take 50 or 100 points about where we were before the trust Quarteng debacle in September, late September, starting of October. And if the market would really have been nervous about what Sunak and Hunt are doing, we would have probably been trading around 115, not 119.
Yeah,
probably not have been trading at 110, because the dollar is not strong enough. But we would have been trading a bit lower, and it's holding pretty well. So from even
Sunak was the chancellor previous, correct? Wasn't Sunak like before he was the prime minister, he was the chancellor?
He was, yes. Yes.
Right. So I mean, you know, just from an outsider looking in, I mean, you got to think the stability of the, you know, without knowing much about him, I would just feel more comfortable with him at the helm at this point, you know.
And that's exactly how the investors are reacting to it right now. So okay, it can be a long process because the measures that they put in place are not overly friendly towards business. So in the longer run, I don't know, but short term, at least, the investors are not too worried about the Sunak Hunt pair. So it's something to note.
Okay. All right. Awesome. Hey, Stelios, before we let Grega in, because he's going to take over the charts, what were you looking at? I know you had Ryan and KMan on the flow show. We're obviously missing Ryan right now, but what were you guys looking at?
I mean, we were looking at things in general, talking about China quite a bit, about whether these new lockdowns, you know, what we can make of these news. And frankly, the result is, the answer is not much, you know. But the question for me is, what do we do now for the next week or so before we get to Powell? And I remain of the opinion that we are probably going to squeeze higher, slowly inch higher in risk. I know we had the opposite move yesterday, but overall, I think we're going to squeeze higher a little bit in risk, a little bit lower in dollar, and then all bets are off when Powell talks, because I think he's going to be on the hawkish side again and disappoint. But until then, like, you know, you said it today, markets are rallying a little bit. It's being constructive, and I think we're going to continue like that for the next few days.
All right, and one of the things and I want to get your opinion here in gold, and then we can talk a little bit about silver, and then I promise, Grega, stand by. We're going to bring you on here in a moment. Gold's holding up above the key fib level, also a breakout point. This is another, and you guys can obviously, I have that drawn out for the ForexAnalytix community, but you know, you guys can see it as well. It's a really key level of support, and it held yesterday. And this is one of the other things that if you are long dollars, you've got to be cognizant of this hold in gold. If gold continues to hold above 1730, you're fighting an uphill battle with the dollar, because the gold and the dollar, that divergence, or that inverse correlation is very, very strong at this time. So as long as gold is holding up here, be careful, you know, for those of you that are out there trying to buy dollars, because gold's still holding up. But what's silver going to do here, Stel? Because we had a big bounce in silver overnight.
Yeah, we're reversing yesterday's move. I think gold is calling the shots, and it's very well defined. 1735 first support, then we have the all-important 1680, 1690 level. So it's very well defined in gold, and silver, I think, just follows. Obviously, silver is a bit more affected by potential Chinese lockdowns because of its industrial use, etc., but I don't think you can have gold moving one way and the silver the other. In fact, silver usually outperforms in either direction. So I think you're right in concentrating on gold, and I think silver would just follow times two.
All right, very, very good. I appreciate it. Hey, we got about 15 minutes before we have the Canadian retail sales. Maybe 10 minutes of Grega. Grega, what do you think about Argentina right now?
They are not in very good position, right?
All right. Well,
I mean their currency.
They're very experienced
currency,
with it.
right?
They've gone through this, I don't know how many times.
Yeah. I mean, they won 36 matches in a row. Of course, this has to stop somewhere. And if it has to stop, it's very good that it stops on the first match of a World Cup.
There you go.
You know, maybe that, or maybe they made a special deal with Saudi Arabia for oil to lose a game. You never know. I'm kidding. I'm kidding.
Because that's what Argentina needs. Exactly. Hey, well, Grega, what do you got for FX? Let's not discuss the World Cup, although I think it's, I'd rather talk about that at this very moment in time. But let's see what you got with the markets.
Well, I still think that the most important probably is to watch the 10-year US notes and stocks to know where the US dollar could move. And we are seeing pretty nice reversal or recovery on the 10-year US notes. I'm looking here at the intraday substructure to give you the idea what may I expect by the end of the week. And it looks like that this is still an ongoing impulse, meaning I'm tracking a 5-wave recovery. So I think that that's now a consolidation. There's a very nice support when I look back here to October 28th swing high and this swing low from last week. So I think this still can be a wave 4. And if we rally, then I think that US dollar index will stay in this downtrend. I'm tracking this bullish, this bearish flag here. So in my opinion, it's still too soon to say that US dollar is headed back to the highs. I think that this intraday weakness still for now is in play. And if we have this in mind, let's take a look on the S&P 500. Well, very nice reversal, very nice recovery. And even if the move from the lows is going to be a corrective, then it should be made by 3 waves, right? So I will label this as a 3-wave movement now. Okay, and again, if you look at the substructures, each leg, the first leg should be made by subwaves, 5 subwaves, and the wave C, third leg should be made by 5 subwaves before the whole correction can be finished. And if you look closely here, we are now consolidating and still cannot count 5 waves to the upside within this wave C. So in my opinion, this makes a very good case for, at least in the short term, that we can retest those highs here. As Blake said earlier, this support here is very important, around 39.30. I think that was a wave 4, so looking higher for wave 5. So if we have this in mind where the US yields could go, to the downside, and the US notes obviously higher, as I showed you on the earlier charts, then I think that euro dollar could also find a support. I'm also watching Aussie. However, there was not such any aggressive hawkish view from today's meeting. So I think that we have to be careful. Copper was also making a very sharp reversal lower, and we have this China locks down. So this is something that could have a bearish impact on the Aussie, but still it's doing quite well here, holding the support despite all of this, what's going on. So I think that this is maybe more linked to potentially bullish case on stocks. So if stocks will recover, I think that Aussie dollar at some point will follow. I'm watching this intraday trend line here, still can count corrective pullback here from the highs. We are still holding above wave one invalidation level here. So I think that as long as we are above 65.50, there is a chance for this market to continue to push higher. If on the other hand, we just break this, then I think that we are going back to the lows. Also, let's take a look on dollar Mexican peso. Now this one,
Isn't it surprising? I'm sorry, I want to jump in here with the peso just because I've got my toe in the water. Isn't it interesting how the dollar mex really has not been able to sell off now that we're near support?
Yeah, and I'm very interested in Mexican peso in general, because despite what has happened yesterday on crude oil, it's actually still doing quite well, in my opinion. Yeah. So I still think that this one Mexican peso will stay in uptrend versus the US dollar. And I think it's a very good, as you said yourself last time, it's a very good carry trade. And I think that it will continue to the downside there into wave 5. We have a very nice trend line resistance that we should watch for. Also, if you look here on the very big head and shoulders, now if that's the neckline, and let's say that this neckline was broken, you are now at the same trend line here, the broken line. Yeah. So this should be the key reversal, let's say, in the next few sessions. So in my opinion, still this downtrend is in play, and at some point I think that we will retrace all the way back to this pandemic low here. Also, if we look at the dollar Swiss, earlier you discussed about gold. So I want to bring attention firstly to dollar Swiss. Now, dollar Swiss has made a very strong reversal to the downside. Okay, it made a very clear 5-wave drop. Now, in Elliott wave terms, this means a change in trend or direction of the current trend, where the market should move after the next pullback. And you can see that I'm now observing the contra-trend movement. Could be an ABC rally, possibly even back towards 450, 61.8%. But these two, even 38.2% is important. So these FIB levels could cap the upside here. At the same time, if we can expect more weakness, obviously after this rally, because the first drop was in 5 waves, then on the opposite side of this, gold could rally, because we know that gold and Swiss franc normally has a very strong correlation. So I think that gold here is in a temporary pullback, could be a little bit deeper one than the current levels. 1700, 1710, that's the support that I would watch for, because I can see room for further upside here on Swissy, which could equal to slightly lower levels on gold as well. But overall, I think that this is the correction, and that eventually we will fly higher here. Also, quick look at crude oil, maybe a slightly bigger picture here. We are coming into some very strong supports, but notice that after this push to a new low yesterday, new intraday lows, notice that now the drop from these March highs is in 5 waves. So what it means? Well, it means that we are still in the first part of a much higher degree corrective cycle. So that was an impulsive rise here, as I showed up from 2020 lows. meaning that you are now in a very deep corrective phase. Maybe will not be that deep, but it can be complex or sideways. So I'm afraid that we could be chopping around on crude oil for quite some time here. But regarding
sloshing around.
Dale, that's a dad joke.
Well, that's what I see in my head.
Hey, Grega, really quick. What are your views on Bitcoin? I mean, Bitcoin's been holding this 15,500 level pretty well. It's obviously in breakdown territory, below the 18,000 level. Are you expecting lower levels? I mean, I am, but at the same time, when's it going to break down, and what are you seeing?
He's got 8.
Well, I think that there's room for 12,000. Okay, but what's the big issue with cryptocurrencies that always when it drops 80% can fall for another 80% or 50%. So that's something that the crowd has to understand, and that still think that we are in a downtrend, and that we could even see this price falling on 2 parts again on a half. So I don't see wave 5 completed yet. Notice that here from end of that wave 4, since August, still ongoing weakness. This drop must be made by 5 subwaves before we may look for potential lows or a reversal. But Elliott waves, as you know, it tracks the crowd psychology, the sentiment. The current sentiment is exactly what you want to see whenever you see bear market in a 5th wave. Okay, and when these two come together, I think that it makes a quite strong case. But I know that it sounds very maybe not that smart, if you wish, but still, I mean, when market is extremely pessimism all around the world, then obviously this is something that we have to consider, that the opposite may occur. So maybe we will see some stabilization later this year, maybe next year.
All right. I appreciate that. Hey, we got about 2.5 minutes before this Canadian data. So I'm going to take it back over. But Grega, thank you so much for giving your opinions and your outlooks on the market. I know like people like myself, the reason why I love to listen to you or Andre when Andre talks about harmonic patterns is because they're easier. I mean, they're harder for me to find, the Elliott wave counts. And so I love just being able to rely on an expert like yourself. And that's why having your analysis on ForexAnalytix every day, everything's updated, all the analysis updated. It's really a pleasure to have you part of the team. So thank you very much.
How many companies have a wizard on staff?
Like your jokes on oil are really crude. You
That's not my
you have
jokes.
To be a lot more refined.
Your dad jokes are even worse than Dale's. Than Dale's. And you're younger. So what's going to happen 10 years from now? You're going to be like embarrassment. All right. Hey, listen,
you'll hang out with them.
We've got Canadian data coming up. I'm gonna
Katie Stockton too.
Yeah, we got Katie Stockton. She's gonna be here in a moment. I love Katie's work. She's a CMT, so her technical work is obviously off the charts. I'm
a big fan. I'm really a big fan of Katie.
Oh my gosh, yeah, we did these dad jokes are just killing us. All right, so here's the this is the data flash. I almost hope that Katie heard that, so we'll see. Anyway, let's see. We got that Canadian data coming up in about less than a minute. I don't know if there's any other. Steve is even Steve here? Even Steve? Is Steve even?
Probably not.
He is not here. All right. So, KMan, any last minute comments before we go or before the data?
No, really not, mate. I mean, that's all quiet.
Ping pong.
On my side.
By the way, I have one thing to say very quickly. This underperformance in Ethereum past few days, where it's leading the way lower. Apparently, it's remember this guy who hacked like 500 million of Ethereum from FTX? Did you read about that? As they were Well, it was basically stolen. They don't know who it was. Apparently, he's trying to unload it somewhere and is, selling it a little bit at a time and then using some kind of strategy. I don't know exactly, but apparently this guy is the reason why Ethereum is underperforming. Just something interesting.
That's really,
yeah.
I should put all my money into Ethereum because that's great that one dude can do that. So, hey, we got a few seconds. Here comes the Canadian data.
Yep.
Retail sales, remember, we're around that pivotal 134 area.
I
So
bought some Crown Royal.
Okay,
Hey,
let's go.
Crown Royal, see? It worked.
So a little bit of mixed data here.
Higher.
And the dollar CAD has zero reaction. That's par for the course. Now, hey,
boy, that was exciting.
That was the least exciting data release I've seen in a long time. Hey, really quick, guys. I know everybody's starting to pack it in because it's Thanksgiving and, the Thanksgiving holiday. Everybody knows it's going to be a slow week in the FX market. But remember, we still have the RBNZ tonight or, tomorrow morning if you live in obviously in Japan or Asia or, even New Zealand. Tomorrow, we've got a lot of European PMIs. We have PMIs here in the U.S. tomorrow. We got housing data in the U.S. We got durable goods orders, so a lot of inflationary figures going to be out. And then we have the FOMC meeting minutes tomorrow afternoon. So before you pack it in, just remember we got a lot of stuff happening over the next couple of days still to come. So don't get too comfortable with your, making turkey if you're here in the U.S. And I want to thank you all for being part of the ForexAnalytix community. Make sure you check out our sponsor, the Trader Funding Program, when you get an opportunity. If you want to learn how to access our money, we just like I said, I think I said yesterday, we just authorized a really big payout, a 5-figure payout yesterday or this over the weekend, which is great. I love to see that when we get to pay out our traders. So if you want to learn how to access our money, there are the different dollar amounts you can access, and you get ForexAnalytix included for a period of time as well. So Stelios, Dale, KMan, Grega, thank you guys for being here today. Appreciate you. And Dale, have a great interview with Katie.
Thanks, Blake. Thank you, team. Welcome back to F.A.C.E, Katie. How are you? Hiya, Katie. Waiting to hear you. There we go.
Hear me? Okay.
Got you now, Katie.
Good morning. Got this figured out here.
All right. Well, welcome back to F.A.C.E. Before we get going, Katie, I'd like to congratulate you on that call you made in August. I saw it on CNBC. You turned bearish up there when we were up against that 200-day, looking for a retest of the lows. Very nice work.
Thanks so much, Dale. Yeah, that was a tough call to make, to be honest, but it kind of feels like we're probably going to be in store for something similar here pretty soon. So we're watching it closely.
Okay, so if you want to share your screen, a couple of markets I'd like to go over with you and get your impressions wherever you want to start. If you want to start with S&Ps, that's fine.
Of course, yeah. So, I mean, this is the S&P futures. Let me make it bigger for you all. We've been really honed in on short-term momentum. There are a lot of similarities between this relief rally that we've seen and the summertime relief rally. And so we've been trying to respect the short-term momentum behind it and also really tuned into the daily indicators because we feel we have to be. We'd love to normally eliminate some of the noise that we're getting a little caught up in, but this is what the market's lending itself to. And we do have a lot of clients who are trying to take advantage of the counter trend move. So therein, we feel like we have to kind of help them navigate it, even though we don't really advocate counter trend positioning. So just as of today, we have a couple interesting things going on very short term. The consolidation phase, which is not unexpected after the previous week's very strong rally.
Yeah, can you define a Sigma 7 event to our community?
I don't know.
That's
all you tell. So this is the daily stochastic oscillator on a 12 period. I know we have some technicians in the room. When it turns up like it is doing here, we call that a bullish pop. And the bullish pops do tend to see minor upside follow through. And so we are looking for this consolidation here to resolve to the upside for one last push higher before this relief rally fails. Now, if you look at the proximity of the 200-day moving average in purple here, this is the S&P future, so it's around 40.73. It does look surmountable to us this time around. So we don't expect an exact pivot like we had at that August high, which was really pretty remarkable.
Could we get back there, Katie? Could we get back to the August highs?
Level? Yeah, I think that's a bit of a stretch based on what I'm seeing. I'm looking more for the same level that I feel like everyone's looking for, which is kind of in that 4,100 to 4,200 zone. And that's just simply based on the posture of the indicator. So we're looking for a little upside follow through.
Could I ask you a question though? I really like your work, but I also like to think about what everyone else is looking at. And, you know, if you take a trend line from the all-time high and then the highs we had in August, that's going to break out over 4,100. I know a lot of people are looking at that line because it's so obvious.
Yeah, it's funny. I totally respect that because, you know, this is a downtrend, right? So that I could naturally see that people would be encouraged by a breakout above it.
Right.
You know, we use something a little bit different for our intermediate to long-term trend following node, and it's called the cloud model or Ichimoku, and you can see it here. So this is a weekly bar chart of the S&P 500. Weekly stochastics have room to overbought, so that could foster a little upside follow through. But you can see that the cloud is really looming overhead, and it's sort of a wider band and a little bit more stringent in terms of what would be required to reverse this downtrend. The upper boundary starting in December around 42.27. So we think that you know, more work would be needed to actually reverse this downtrend based on that metric. And we think it's unlikely based primarily on what we're seeing on the monthly charts. So the monthly bar charts have some indications that long-term downside momentum will continue to characterize the market here. So that's why we're really being adherent to the shorter term gauges. And as soon as we see things like this roll over, so the weekly would roll over and or the daily MACD would roll over, that would be something that we would see as a risk metric. If you look back here after the summer relief rally, it was August 18th that we saw a sell signal registered by the daily MACD on this chart. And so if we see something similar, we're going to certainly recommend hedging strategies and what have you.
Okay, Katie. So the big question is, I'd like your view on the dollar, because we peaked confirming a lot of momentum indicators, and it was such a strong trend that, don't you think for a top to be in, we'd get some type of topping formation and an echo rally, a failing rally, something like that? What's your view on the dollar after that, the recent break here?
Well, it's not convincingly a long-term peak for the dollar index, at least. Certainly a corrective phase that's the most significant that we've seen in more than a year. But the impact on the longer-term gauges, this is the monthly chart. Here's a monthly stochastic. Here's a monthly MACD, things that we focus on for trend following purposes. They're not flashing some big sell signal, and not yet at least. So we're just respecting the uptrend. It's usually the right thing to do is to assume that an existing trend will remain in force, barring what you're sort of citing, which would be more sort of a toppiness to it, as opposed to sort of a V reversal or inverted V reversal. So we've made the call for this pullback to potentially even deepen. So here was, this is the daily dollar index chart. You see this cloud here, the shaded area, also called Ichimoku, has really captured all these pullbacks. And all of a sudden we started to see this deterioration in intermediate term momentum following a DeMark sell signal, for those that know it. And this breakdown, it's something that is short-term in nature, but it does suggest that we'll see probably more downside, which would mean that the dollar index should take out this sort of 105 area. You can see it's a pretty important level for it.
Real important. I think people are going to, that's like a bull bear demarcation line, that if we take out that level, people are going to declare the bull market and the dollar dead.
Yeah, I would think so. It definitely has some psychological significance, right? It's such a round number. It's the 200-day moving average. It's previous peaks and troughs, but we still expect that it's really counter trend.
Okay.
The next support level that we would be watching, let me show you on a Fibonacci retracement, which we think is really a great way to try to understand if something has fully reversed or not. So here's your 105, also an enhancement of that by a Fibonacci retracement level longer term. The secondary support you can see is around 102, but then if you look forward per this cloud model, it does rise over time. So my thought is that we'll see it dip below 105, but not for very long, and kind of come into this support level, perhaps in here, and resume higher, noting that we already have, with the downdraft that we've seen, an oversold condition on the weekly chart here. So the weekly stochastics are already oversold. So in a way, you could see the corrective phase is already having worked off the overbought excesses that were built in with that very strong uptrend.
Okay, yields, Katie?
Yields, well, there too, we have a corrective phase, as you know, unfolding, and the correction follows a breakout. The breakout put next major resistance for the US 10-year yield around 5.25. We think that that's actually a realistic level, looking out long term. But near term, there is additional downside. And we say that for a couple of reasons. One, the stochastic oscillator. So we're seeing that reaction to the overbought condition, still seemingly in its earlier phases here. We're likening it to the summertime sort of corrective phase here. The DeMarc's signals are somewhat similar too. So we're looking for 10-year yields to come into about 3.5, if not even deeper, to secondary support around 3.25 before this longer term uptrend resumes. The yields, you can see even just over history, they do stair step higher. So as much as we're focused on these run-ups that can be so extreme, they are sort of dotted by these plateaus or corrective phases. So I think that's what we're in the midst of here on 10-year yields, and somewhat in falling with what we're seeing on the dollar.
Okay, and most would interpret that as being a tailwind for risk, right? But isn't there a chance, and I don't know if you have a chart on it, that part of the move down in yields might be some type of growth scare? That rates, most people don't think that rates could come down and the market could fall at the same time. Is there anything in your work?
Listen, like I'm not one to ever rely on any correlations. That's why I try to, when I evaluate things, I'm not a macro strategist by any means. So I'm probably well served just looking at things independently. And in doing so, it's like you're removing any of the biases that come from those historical correlations, which we all know do break up for, months at a time, right? Thinking about the dollar and the relationship.
Thanks for reminding me. No, really, Katie, I need to be reminded of my paradigm that I go to, because, you're so right that every instrument is its own individual entity. And when you start to put the jigsaw puzzle together, sometimes you put the wrong piece in, and then you continue to build it.
It's been a really difficult year for that, right? So many people were burned by the move in treasuries, and reasonably so, because we're breaking away from historical norms. But we know that that's the case, and that's why I think the charts are so valuable, because they can help us navigate sort of these short to intermediate term periods during which the correlations get disjointed.
Okay, I wanted to ask you about the gold miners, because Newmont is putting in a key reversal month. I know we have maybe a week of trading left, but pretty serious reversal, right back to resistance. Are you getting anything in the miners that tell you that we're getting some type of bottom might be near?
Yeah, so we actually added Newmont last week to our long ideas. So we're on board with that, and we feel that the gold miners. Yeah, exactly. So we do feel like also they have more shelf life as a counter trend position. It is counter trend still, because we've seen Newmont and others trend lower for more than several months. But they do have indications of at least an intermediate term basing phase with the recent breakout. And that breakout reflects improved intermediate term momentums. And you can see that here in this weekly MACD. So at a very minimum, we're willing to try to take advantage of this as something that should give us a nice retracement of this downdraft. And we're seeing strength really across the metals complex. So it's not just gold, but we think that this is something that we're a little bit more comfortable trying to leverage as opposed to perhaps
uranium.
Yes, uranium too. But versus, picking up shares of the mega caps or something like this, where we feel like there's still some real toppy long-term formations, we're looking for things that don't look at all like Apple or Tesla, and then Newmont would certainly qualify. Yeah,
I was looking at Apple yesterday. It looks vulnerable to me for a break to another low. Is that? Yeah. And the market held up pretty well with Apple under attack yesterday.
I would agree. And that shows some breadth behind the relief rally, and yet another reason to expect it to persist a little bit longer here. We're thinking that mid-December, we might see it falter, but then we have positive seasonal influences, perhaps that can keep a floor under the market until we get our proposed volatility event. We actually have this morning, I should say, our first counter trend signal in the VIX per the DeMark indicators. And it's something that we're keeping an eye on. It's not something that we're acting upon yet, but it's sort of a potential issue here in the relatively near term, where we look at these signals as basically indicating that the VIX is oversold, right? So here's our signal today. And when you see them, you often see some kind of rebound in volatility. So if that signal is confirmed, here's the last time we saw.
Well, maybe instead of resolving this to the upside, the last 4 or 5 days of sideways action, the VIX is saying there could be a shakeout prior to the next advance.
Yeah, that's interesting. It's definitely one takeaway. So we're really watching, again, these daily MACDs, like if this is on the VIX here. Yeah. This crosses up, well, that's something that we would see as a risk metric for the S&P.
Someone told me that VIX is the most undervalued asset on the board.
Oh, goodness.
Yeah. Anyway, that I thought
it's a difficult thing to trade, though, isn't it?
Yeah. I mean, look how disappointed people have been through this whole bear phase, looking for a 50 VIX, and 32 was the best we could ever do.
We'll get a 50 VIX, but I don't think folks are generally well served by just picking up a VIX product and forgetting about it. I think if you're trading the VIX products as hedges or for directional bias, I think it means you really need to be close to the market. So watching it every day and really attuned to the short-term indicators to have any success there. They
actually have VIX futures now, Katie.
Yeah.
The old SIBO floor, and they have locals down there trading VIX futures now.
Yeah, there's so many nuances to it, right?
It doesn't have decay like a lot of the products, have this decay built in, that even if it's going sideways, you're losing money.
That's right.
Like an option.
You can see it every day, just in terms of just, the comparison to the VIX itself. This is a monthly chart of Apple, and I agree with you. I think,
wow.
I take issue with it. I mean, just on the surface, it looks toppy. So, that's something that, will be problematic for the major indices if that's the case. There's this long-term support around 127. You can see the monthly gauges all pointing lower. So it doesn't have immediate implications, but I would suspect that if Apple gets perhaps back up into its 200-day moving average, it might get sold again.
Yeah, because it's what, 8% of the market, Katie?
Yeah, something close to that, 6 or 7, depending on what you're looking at. But it still has a real influence on market sentiment.
Okay, so let's go to my favorite sector in the universe, the cannabis sector.
Oh,
I know last time when we were talking, things were starting to develop, and I know you're strictly a technician, but there are people saying that President Biden may get the SAFE Act through by the end of the year. What's your stuff saying about?
Well, so
you
we
know,
just published, we have a monthly cannabis report that we publish, and we just published
why?
it this
Because it
week.
takes people a month to read it because they're using cannabis.
We figure it's
Huh?
going to take some time to turn.
All right.
So we want to be there too. You know, I do also have a position, and the position is in part because I feel like it's a bit of a call option, right? You know, if you
Yeah.
have kind of regulatory event there that you have to be there ahead of it, or else you'll probably miss the bulk of it in terms of the initial reaction. But we like to think of it, you know, in terms of a potential early stage base. This is MJ, the ETF. Bullish short term, neutral intermediate term, bearish still long term. The indicators have certainly shown improvement. You can see that over the past, I mean, really even months. But with that, we really don't have much price appreciation on the back of that. We definitely have sort of in the underlying, though, some signs of life
Right.
is the way I've put it. And you can even see it in relative strength terms. So this is MJ divided by the S&P 500, a little bit of a basing type of setup there as well.
Yeah.
Within the sector, we like to pick it apart and look for sources of leadership for those that are interested in actually investing in the companies, not just the sector. And there's definitely some cyclicality to it, which is kind of fascinating. Like Tilray here would look very attractive on this relative rotation graph. So we try to break it down into names that have some better relative strength. But when you look at them on the surface, this is just a sort of a selection of different names. They all sort of look the same, right? I mean, it really feels like it's such a top-down oriented sector. And that's why, and this goes for all sectors, in order, you know, if something's really homogenous from a technical perspective, you really are well served to look at these relative rotation graphs or some kind of relative interpretation to try to find the sources of leadership for when the sector comes out of this bear market cycle. So I think, you know, if it's not going to be helped by the fact that the broader market still, I think, has some downside.
That's my conflict.
Of
owning anything, right?
Right. They wouldn't be immune to a downdraft to say 3,200 by the S&P because they are high beta and will be sensitive to that. But in and of themselves, there's definitely some signs of life there. So, you know, if you can,
like a great report.
If you can buy it and just kind of forget about it and not look, maybe in a year from now, you know, we'll be well served by that.
How do people get that report?
You can sign up for this report on our website. And so we have this report and a cryptocurrency compass report as well. That's a weekly. These reports they're very low priced, and we figure they're just there for folks that are you know, concentrated in these names or just interested and want to know when they're actually turning the corner longer term. So right now we're just, you know, putting them out there as placeholders until we get that bullish shift longer term. But there are always, you know, there's always themes and action items. You know, obviously the cryptocurrency market has changed, you know, for the worse. And yet we do think there's long-term opportunity there. So it makes sense to continue to, you know, track the charts and just wait for any kind of positive divergences and to be there when those manifest themselves.
Okay. Richard Angeles, Katie's website is Fairlead.
Right. It's fairleadstrategies.com.
Yeah, that's
easy. Yeah, let me see if I can it's there. And we also have sort of a new service. I can't remember, Dale, if we talked about it last time. Outside of our ETF, we have something called the Fairlead Strategies Idea Generator, and that's on Substack. But here you can just click through the research and choose whatever research you're interested in, either sign up or pick up a trial of the equity product. But we have this new Substack research report or idea generator that has usually about 3 new ideas a week. So we will publish, you know, anything that we feel like it's kind of interesting in this. We actually had Barrick Gold as one that we presented as an idea not too long ago. So we put out some just technical ideas here. We intended this to be a long only product, but now it looks like we're going to have to start adding some short ideas, not to fight the tape, but.
Okay. All right. Well, I wanted to wrap it with talking about some of the oil shares, which way outperformed the WTI for so long. And you know, finally they're beginning to cave a little bit, but crude is trying to rebound. Is there still a lot of vulnerability in the shares, since I mean people felt they were going to print money and they diverged from the real commodity for over a year? I mean, crude topped on the invasion. That was 8 months ago. And the shares have continued to climb higher. What's your thought here? The shares are right?
Yeah, well, listen, I think I don't know that we want to think of them as like one influencing the other necessarily, because we have seen that breakout.
See, there I go again.
But here's my thought. And listen, we are sort of still all in on the energy sector. It's the only sector position that we have in our ETF right now, the fairly tactical sector ETF. But if we look at this is the S&P 500 sectors year to date, up 63%. Isn't that amazing? It's just remarkable.
It really is.
This spread on the sector front. And this is the second year of this, right? So we suspect that energy is certainly going to move down the ranks. I don't think it will be next year in this sort of top billing here, maybe not even top 3. So we are looking for a sort of a pullback in relative strength, but it's not imminent yet. I mean, right now we're just looking for a pullback in absolute terms. So this is XLE, the energy spider. This is a DeMark signal supporting a couple of weeks of sort of sideways to lower price action. But even the long-term gauges still do point higher. We have a 200-day moving average pointing higher, you can see, and really a very favorable setup still in the monthly gauges. So there's so few things that have a monthly stochastic and MACD that are pointing higher. So to reward one of the only sort of areas of the market that is in a long-term uptrend, that's what we're doing with energy.
Yeah, but stay with what took you to the dance.
That's right. Until it proves us otherwise, right? We'll see more deterioration in these longer term gauges before a major shift. So we suspect that it will maintain the relative strength, but we're also seeing relative strength from materials, and that's helped, of course, by the miners. Industrials have done very well. So cyclicals have done pretty well throughout. Where we have sort of an underweight recommendation on the sector front would be those same sectors that have exhibited downside leadership for the most part this year, like technology, communication services, and discretionary. FANG, exactly.
Yeah. So Katie, I have to ask you about Bitcoin. Yes. And then I'm gonna then we can part ways, but I have to see what a debacle, and what a shame. A million people of basically that a lot of people, I don't know, they enjoy seeing other people in misery. I really don't. I don't think it's good for the industry for that many people getting burned in a fraud. So
it's sort of a crisis of confidence here, and I think it will take a long time for this whole arena to recover. But it was already trending lower ahead of this most recent breakdown. So we've been respectful of the longer term downside momentum. This is, we've been watching the Fibonacci's on, here, wait a second, let me get to the right one here. For Bitcoin, the last one that was being tested and holding was this 18,300 level. This is a monthly bar, but now we have a confirmed breakdown below that level. That puts next support, unfortunately, down around 13,850, which is this previous resistance level. And you can see it's starting to align with the monthly cloud. The monthly cloud, believe it or not, could tell us that this is still like a secular bull trend. But we think it's going to take a lot of time for us to get the buy signal that we had back here. So we would give it probably a few months, soonest, to see some kind of turnaround. That's something that we can really leverage. Very near term, I actually don't think there's a ton of downside from here, because there are some DeMark indications that suggested the down move a couple of weeks ago was enough for now. but I think the risk is still very heightened, intermediate and long term.
Okay, well, Katie, the last 30 minutes definitely again shows why every important financial media outlet wants to have you on the air as a guest because you're the best.
Thank you, Dale. That's really nice of you.
Really, I mean, I learn from you every time you're here, and you mentored me about trying to, figure everything out and just trade the charts. People need to hear that, even veterans, because we
Yeah,
all,
no.
it's all in our heads, right, Katie?
Well, we're all guilty of it and letting those biases sort of get worked in. And that's why a systematic approach can be really valuable.
Happy Thanksgiving to you and your family, Katie.
Thank you so much. And same to you and yours. Take care.
Really, great catching up with you. I'll be in touch.
Okay, sounds good. Bye.
All right. Okay, everyone, Katie Stockton. And you could join the team in 15 minutes on the Morning Edge. Wish everyone a good day, good hunting. People are saying thank you, Katie, if you're still with us. And I'll see everyone tomorrow for the last day of the week. Adios. Oh, yeah. Don't just count your pips, count your blessings. I'm getting a little senile, Okay.